Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Apple report for Tuesday, August 8th, 2023. Before we click through all the charts, just want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel, as well as share the content if you would with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this. Daily analysis in the SPY and Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week in 5 to 10 minute video format that you never see on YouTube, that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves on those underlying stocks. In fact, we put one out on Monday on Amgen, the biotech company. You may be interested in seeing that. We offer a 5-day free trial up front, so you can see everything we've been posting for the last few months, including the recent stock picks, and you can bow out at 4 or 5 days if you like, for no charge at all whatsoever to you and your credit card. So that is all I've got to say. Check out wickedstocks.com. So here we are. I'll start with the big picture once again and work our way in. The fact that several months ago we closed above 169 even, long-term descending channel top at the top of an all-time high that should eventually yield to 24.25. No, we've been anticipating by the end of the year. That is becoming increasingly doubtful. 169 even may be in play over the next week or two with present volatility. I'm going to just cut to the chase here. We have been testing actually only on Monday, certainly slipped into the zone, 178.52 to 180.98. Now, 180.98 is still part of that zone, but I've reduced it to a minor point only because of the day trade dynamic. It is still part of the range, but it really is 178.52, the rising channel bottom. 180.98 is a rising 1/3 speed line. This is part, they form a range that can contain selling through the rest of August and into September trade. And from here, we can rally back, well, to 190.72, which I'll give you in just a moment, within a week, 2 at the most, and really on to new highs over the next several, 3 to 5 weeks, somewhere in that. In fact, let me jump to that right now. This is the same chart, but looking to the upside. So 183.23, nothing more than a simple descending 1/3 speed line. Now, when the market sort of dumps like this aggressively, channel studies are very difficult, but I do like the speed lines for trend identifiers. 183.23, you can see to the right, able to contain daily buying pressures. We could battle it out for the day only between 183.23 and 178.52, and that is a chart I wanted to show later, but I'm going to show here again, 178.52 and the 183.23 speed line. If we happen to push through 183.23, 185.33, potentially 187.79 in reach today, with this kind of volatility, that is certainly possible. And most important would be the settlement. If it were to occur above 183.23, that would then indicate several days with this kind of volatility, a week or two with normal volatility, but several days with this kind of volatility, bullish continuation to 190.72, which can contain weekly buying pressures, possibly through next week. And from there, we could fall back to the meaningful support region, which is still in the 178.52 to 180.98 region. And so this is really the image to show. It would be a settlement above 190.72 over the next week or two that would tell me not only a retest of this high area in the upper 190s, but more than likely these channel structures, the top one at 203.89 becomes a 2 to 3 week objective if we settle over the next week or two above 190.72. So you could say, if you add those two together, 3 to 5 weeks perhaps up to 203.89. That is a real possibility so long as we continue holding this 178.52 level. Now, if we close today below 178.52, with this kind of volatility, we should within the week retest that 169 even, long-term channel top on the weekly chart that is able to contain selling through the rest of the year. And I will go back to this chart to show that it also correlates pretty well with a downside 3/8 Fibonacci retracement from the January low against that recent high in July several weeks ago. So the 169 handle able to absorb selling, yes, through the rest of the year. Despite the fact that it would violate this meaningful channel bottom, I really rest more on this long-term weekly channel top as our base of long-term support that can contain selling through the rest of the year, and I would expect to see it this week if we close today below 178.52. Until then, we are bottom, we may well be bottoming out here. So this, as I've been saying, is your opportunity if you're kind of a 1 to 2 week swing trader to reach for 189, 190 out of the money calls, or just merely go long the stock in the 178.52 area or higher. I'll say that if we close today, and I know I just mentioned 183.23 as our upward pivot point, and it truly is, but I will also say that just closing above 180.98 is a stabilizer through the rest of the week. Ideally, we would have both a settlement above 180.98 and a settlement today above 183.23 that would fully reverse momentum through the rest of the week. 190.72 then expected within several days. So 3 to 5 day swing traders may well be bottom picking 178.52, or they go long above 183.23, in which case 190.72 likely within 3 to 5 days. I'll also say that merely holding above 178.52 will keep 190.72 in reach by the end of next week, where we can place a weekly high. And if we close above 190.72, a good low for the month of August, the following 2 to 3 weeks then likely to reach up to this new rising channel top at 203.89, which may well contain monthly buying pressures when tested. And it remains in reach over the next 3 to 5 weeks, so long as we continue holding above this 178.52 channel bottom. Once again, breaking or opening below 178.52, might we test 169.94 today? I kind of doubt it, but it is possible. I will say that closing below 178.52 does signal the 169 handle within several days, where we could bottom out through the rest of the year. Now, if you're looking at this chart, this is the last thing I'm going to say in terms of the big picture to the downside. If we were to close below 169 even, let's say on Friday at the end of the week, then we continue south into the lower 150s with that kind of volatility, possibly within just 1 to 2 weeks. But under most circumstances, this would be kind of a 3 to 5 week play. But I am not anticipating that. I think there's a decent chance we're going to bottom out here in the upper 170s. I could be wrong, of course. We've not closed below it. So long as that's true, this market poised for aggressive recovery as we move into later August. I'm going to leave it at that. There's really not much else to say. I will leave you with this particular image here. Upside, if we close today above 183.23, no good reason to be short Apple through the rest of the week. And after having tested that long-term support, in the 178.52 level, I don't think there's a good reason to be short right now through the rest of August anyway. And I'll just leave it at that for Tuesday's Apple. You have a great day. Please click like, share, subscribe, and check out wickedstocks.com. I'll talk to you very soon.